In the off chance that you don't live under a rock, you've probably heard of something called a credit card. And if you have, you can thank the Diners Club. See, credit cards were started in 1950 as a way for people to utilize or borrow money and then pay it back with interest. It's the same as taking a loan, but having it available at any point in time. As times have progressed, these loans have become possible for cars, for houses, motorcycles, ATVs, basically anything you really want to, as long as you pay the fees every single month. The issue is that you need credit to build credit, and a lot of times that can be confusing when you're younger. Today's video is going to be focused on how you can build your credit or get started on building your credit at the age of 18 or lower. If you're curious about learning more about the intricacies of how credit scores work, why they were made, and the different components that make up your score, you should be able to click up here and it will direct you to one of our older videos where we discuss everything in detail, along with giving a couple examples or recommendations of cards that could be useful if you are looking to build your credit. So the first strategy we're going to talk about requires some type of legal guardian or parents that would be willing to add you to their current credit card. Now there are a couple caveats, but let's take a look at how this works. I've got this credit card from Delta SkyMiles. I make points on every single transaction I make, and in return, based on that credit utilization, a score is sent to credit bureaus like Experian, TransUnion, which tells lenders how reliable of a borrower I am. So if I'm borrowing 80% of my limit every single month, that's flagged as high risk because I'm borrowing a lot of money. Whereas if I try to keep it below the recommended amount of 30%, or if you're really disciplined, 20%, what that does is that shows that while you have access to a larger amount, you're very disciplined with how much you borrow. And lenders love to see that, and that can actually boost your score. So what happens is, an authorized guardian, such as myself, for my brothers, they can actually add authorized users to their card. Now what this does is, initially when you sign up for a card, you need a credit score. So if you don't have one, this allows you to leverage somebody else's existing credit score and build some on your own. One of the caveats of this is, if the utilization on that card is high, it can actually be negative and ruin the credit score. Whereas if you use it properly, you put them on a card that's very rarely used, has a low amount, you can actually reach a point where the person being added to the card as a user can turn 18 and have a 700 or even an 800 credit score and above. Now when it comes to giving somebody gifts as they turn 18, I can't think of something better than having a solid foundation in the financial literacy space. So it's really crucial to understand that if you do add somebody as an authorized user to your card, make sure it's something that you're not maxing out, make sure it's something that is within that disciplined realm of 20 to 30% utilization every month. That's going to be really, really good in building their credit score, and the moment they turn 18, they'll be more eligible for things like FHA loans, a regular type of mortgage, 30-year fixed, 15 years. And if you've got a question about mortgages, one of our last videos actually discusses good debt, bad debt, and how you can leverage a credit score and loans to actually make passive cash flow in the real estate space. Now the second strategy I want to touch upon does require a little bit of cash up front, but it's beneficial for people who may not have a guardian or may not have people who are willing to add them to their cards. Keep in mind that, as I mentioned this, it's generally not a good idea to add people to your card if you don't completely, absolutely trust them with your money in your life. The reason I say this is, let's say you add somebody as an authorized user, they spend a lot of money, but they don't have the money to pay you back. As somebody who's in charge of the account, you're liable for that, regardless of how it goes. The other person has the ability to pay directly, but it's your responsibility, and that's part of the risk of adding somebody to your card. If you don't have that capability and you've just turned 18, you can sign up for something called a secured credit card. Again, something that we've discussed in some of our older videos, so definitely check those out, and those links will also be in the bio. But essentially, a secured credit card changes the way a credit card works. See, what happens is that when we get a credit card from a company, what we're doing is we're borrowing money from them. They give us a credit line or credit limit that says that we're approved for borrowing X amount of money at maximum. That means that this is the most we can borrow and we need to spend within that. Going back to the same practice, if I've got a limit of $1,000, the most I should be spending every month is $300. The way to keep this in mind with a secured credit card is, instead of borrowing from the bank or borrowing from a lender, you're actually borrowing from yourself. So the way it works is this. Let's say I want $1,000 secured credit card. I would actually pay $1,000 to the bank, and then I would get a credit card with a limit of $1,000. So just in case I'm unable to pay, an emergency comes up, something happens, I'm not at risk from, being in a situation where I can't pay it back. In fact, I'm borrowing from myself, so there's technically no risk. The benefit to this comes down to the point that if you were not in a secured credit card and you were to borrow money and you couldn't pay it back, they would report to companies like TransUnion and Experian, which could ruin your credit score. See, one of the biggest factors is how on time your payments are and how consistent your credit utilization are. These are just two of the many factors, but they make up a pretty big deal of your credit score. And it's crucial that you understand that every bill must be paid on time, you cannot be late. That's why we recommend autopay. But that being said, you also need to make sure that utilization is low and those payments are being made. If you can manage just those two things alone, you're going to be in a really good spot to build your credit, get it up to that 700, 800 score level, which is going to make sure that you get the best rates on cars, homes, any type of personal lines, credit lines, if you're investing in something. It gives you a really strong opportunity to show that you're a trustable borrower and build that credibility for yourself. Even if you feel like credit scores are a scam, it doesn't hurt to have it be your best because it may not make sense, but if you put in the work, it can make sense for you. With that being said, if I've made any mistakes in today's video, I do humbly apologize. Our goal is to educate and share as much as we can, so if we've helped you in any way, please subscribe and leave a like. With that, keep learning, keep loving, keep growing, and have a wonderful day.